Hi everyone, welcome along. My name's Cres, I'm from EOS Property Group, and today we want to talk about armchair development concept initially, and then look in detail at the Whatley Crescent development in Bayswater. Folks, some of you will have known that when we first began this process, we were seeking a way that we could make a 20% profit for our investors. So you may well be aware that when a developer does a project, he initially purchases the land, he then spends money on the construction, and the total costs of the land plus the construction are typically somewhat less than the overall value of the property. And that difference between the costs and the final value are the developer's profits. And we were trying to think of a way that we could get that sort of profit margin back to our investors. And so that's how this armchair developer concept was initiated. So we aim to allow our investors to make a 20% profit on the project because they are acting as developers. And some of the advantages of that concept you can imagine are that the growth you're achieving is not necessarily dependent upon capital growth. You don't need to wait for 3 or 4 or 5 years to get growth on your property because you've already inbuilt that growth as a part of the armchair developer concept. And as a sort of a third bonus, because you're buying a property or taking ownership of a property at well below market value, your consequential percentage rent return is that much higher. So if a normal property returns, say, 4%, because you're spending $50,000 or $100,000 less on it, the same rent return is a far higher percentage. And so you may well find that the property is cost neutral, maybe even cash flow positive. So let me just try to explain how the concept works. We will take a group of investors, individual investors, each seeking to use this concept, and we form them into a joint venture. And this joint venture is the entity that actually does the development, because none of us as individuals have neither the finance nor perhaps the expertise to actually do this on our own by ourselves. We form a joint venture. And that joint venture then employs a development manager, and the development manager's job is to do the entire project, from contracting the builders, organising the construction finance, working at all the compliance issues, liaising with all the councils and all the architects and all the consultants, and then bringing the whole project through to conclusion. And he works on behalf of the joint venture. And then at the end, the joint venture, the group of people, owns a group of apartments on a single block of land. That is then subdivided, or the strata titles issued, so that each of the initial investors takes ownership of their own property, and the joint venture dissolves. So they're no longer obliging to a group, they've gone back to being individuals, and they each have taken ownership of their own particular unit. And of course, they've all enjoyed a proportion of the developer's profit because they are themselves developers. So there's 3 phases to some degree, and we're at this very first phase right now. This is this concept of feasibility. We found the block of land, we've negotiated a price, we've done the maths to make sure that there's around about a 20% profit margin for our investors. That's been done. We've done valuations on the final product. That is, we've provided plans to valuers and said to them, what would this project be worth if it was constructed today? If it was built, you could walk through it, what would be the current market value? And we've got those numbers back. And we're in the process of getting some rent letters as well. But rent letters are a little bit odd in that there's not a lot of point knowing what the rent is now. What you would like to know is what the rent's going to be in 18 months' time when the project's finished. But nevertheless, it acts as a bit of a guide for us anyway. So guys, this is how it works. We gather a group of investors, and for the sake of this little graphic, I've just got 8 people. So imagine it's an 8-unit site. So each of these people contribute a deposit of some kind. In this case, for this example, it's $120,000, which is similar to the Bayswater one. So they each put $120,000 in as a deposit. This money is held by the joint venture, and the joint venture then pays cash for the land. Now, because the joint venture, which is the investors, owns the land outright, there's no mortgage on it, and they can then use that unencumbered land to borrow funds for the construction. So that's the construction phase, and that's the second phase of the project. So the joint venture, not the individuals, then borrows money on behalf of the individuals. Now, in that process, the individuals that make up the joint venture are only responsible for their share of the borrowings, not for the entire borrowings of the whole project. So there's a project account, there's a development manager, and the development manager actually then goes and finds finance to do the development. So it's really, $2 million, whatever it is. But if you want to break it down, it's $230,000 in this case per apartment. All right. So everyone's the joint venture is borrowing that money on behalf of each of the investors. On completion of the project, as I said, it's one title. It's just one site with 8 or 12 or 16 apartments on it. And the loan-to-value ratio, the debt on the whole arrangement is relatively low because there's only debt on the construction. The land's already been paid for by the joint venture partners. At the conclusion phase, we've got this block of land with these 8 or 12 units or whatever it is. We've got a project account that owes money. It's borrowed the funds for the construction, so there's money owed into that account. And each of the individual investors who now want to take ownership of their finished project. So to take their project out of the joint venture, they just contribute back to the project account their share of the construction finance, in this case $230,000. So if you look in summary, the individuals have put $120,000 in for the land. They've put in $230,000 for the construction, giving them a total overall cost at the end of $350,000. And it just so happened perhaps that the initial valuation on this project was $420,000. So the developer's margin, their profit for want of a better word, is $70,000. So you can see how the concept works perhaps along those lines, and how that concept is how we're working out this development project for Bayswater. So let's look at a bit of detail at the project itself. So you can see here is the computer generated image, the concept plan, if you like, and I wanted to put this up just to sort of show you the arrangement. It's a long, narrow block, and the apartments go down the length of the block away from the road, as it were. Down the right-hand side, there's a driveway, and there's car parking in under the verandas. I've got another view to show you that in a moment. Let's look at some details. The site's in Bayswater, 139 Whatley Crescent. There is already a development application successful in place. Architect's drawings are complete, and today we were speaking to the builders, and they're prepared to stand by their original quote. So those boxes can all be ticked, and this is a significant advantage for this particular development. It means a lot of the unknowns have been solved, and a lot of the time wasters have been concluded. In our previous developments, getting development approval has been problematic and slow. We always get there, but it just drags out. Now, the fact that this one's already in place is a bonus in terms of unknowns and a bonus in terms of time saving. And the project itself, as you perhaps know, is there's 2 one-bedroom apartments, albeit with studies, 4 2-bedroom but 1-bathroom apartments, 8 2-bedroom and 2-bathroom apartments, and 1 3-bedroom, 2-bathroom apartments. They've all got storage room, that's external storage, 1 car space, and either balconies or courtyards, depending on whether they're ground floor or upper floor. Guys, just one little thing. There's those 2-bedroom, 1-bathroom apartments, and whilst they're not popular, I would really rethink those. You find many people typically like the 2-bed, 1-bathrooms, in that most 2-bedroom apartments aren't occupied by 2 couples. It's usually 1 couple that use the second bedroom for storage. And so they don't need the second bathroom. And they wonder why they're paying rent on a bathroom they don't actually need. So there's a lot to be said for 2-bed, 1-bathroom apartments. Don't be too dismissive of those. And here again is another photograph of another copy of the computer generated image, and shows you the sort of front layout, if you're the side layout of the project. We have some detailed plans, but they're very difficult to demonstrate on this medium. So if you would like to see the details, just flick us an email or give us a ring, and we can send you through the PDF, and you can zoom down deeper and deeper onto the project to see the specific details of each room, or pull back to see the whole project laid out on the block of land. but it's just difficult for me to demonstrate here. So please just be happy, don't hesitate to flick us an email and we'll send you through a copy of the PDF. So guys, here's the breakdown. On those few previous slides I said here's with the deposits and here's with the construction finance and here's the total cost to the investor, and it's exactly the same with this one. Let me look at, say, I don't know, Unit 8, for want of a better one, a 2x1. The deposit paid up front is $119,000, and that goes to cover the cost of the land. The joint venture then goes and borrows on behalf of the joint venture partners $237,000 for this apartment. So the individual investor doesn't need to find these funds at the beginning, it's only at the very end. So the total cost at the end to the investor will be $356,000. This current project, this current unit is valued at $425,000, so there's a $69,000 difference between the current market value and the anticipated cost for construction. So you can see with the profit margin 69 grand in there. Now, you don't know what the final market value is going to be, but we've tried to be as reasonably conservative with these market estimates. So then guys, you can see too that the prices vary depending upon the apartment itself and the size. The most expensive one naturally is the 3x2, and the cheaper ones are the little 1x1s. Now I also wanted to show you this little diagram here produced by the original developers. It shows the square meterage. These ones are internals, and I just wanted to say that when we've done 1x1s previously, we look at about 50 square metres as a reasonable expectation for a 1x1. So the fact that there's a 55, 55, 56, that's a very good size for a 1x1. And the little 2x1s, for example, they're 55, 56, albeit because the study and the second bathroom are about the same size. So they're not bad. Now the 2x2s we've been producing, we were looking at a number of developments in Perth. 60 square metres is probably an average size for 2x2s, and they go pretty well. We've found some at 65 square metres, and they've been particularly popular. They're popular both in terms of tenants and the valuers love them. There's quite a significant difference in value between a 60 square metre 2x2 and a 65 square metre 2x2. It's far more than just a slight increase in floor space. They're much more popular. And as you can see, these ones are 73 square metres. That's a very large apartment. So they're particularly appealing. This design has got particularly large apartments. They've also got courtyards, of course, or balconies, depending on where they are. And there's a storeroom and there's other bits and pieces. Now these original figures here are internals. They're not including any other component part. So they're a very good size. Now over here on the right hand side, these are valuations that were done previously on the apartment. So for example, we got a valuation last week on unit 11. So 435 and 445 of the previous. The values came out at 465 for this. So they're up a little bit on what they were previously, but we'll be fairly conservative with our final market estimations. Guys, when we look at these developments, we source the land not based on is it feasible or is it doable, is there profit margins for our investors. The primary focus is this a good long-term investment site? Does it tick all the boxes in terms of the criteria that make good long-term investment? So that's the driver. So one, does it tick that box? Is it a good long-term investment site? If the answer is yes, then we go and check the feasibilities. So some of the rules we've got to follow are these. Is it within 7 to 10 kilometres of the city, or does it stretch along some sort of arterial link, like a major freeway or major railway line, for example? Because that can extend a bit further than 10 to 15 k's. And the answer is, of course, yes. Look, Bayswater sits here. There's Bayswater train station, probably 500 metres away. This is Melton train station here, probably 700 metres away. And the train takes you straight through into East Perth and straight into the city. Spectacular location in terms of train transport. It's got other arterial links, of course, you can drive. Okay, and it's got access to the Tonkin and the Great Eastern, so access north, access out to Midland, and it's also got a bus route that runs down the railway parade straight into the city as well. So in terms of arterial links, it's excellent, even across the river, the Garrett Road Bridge or the Tonkin across the river just there. So that's great. Now, the next issue, of course, is what about shopping facilities? Well, it turns out this has got surrounded by little shopping complexes. I think there's a Coles here. There's certainly a little shopping complex just there that's got an IGA or something, and a chemist shop, and a real estate agent, and a petrol station, those sorts of things. So there's lots and lots of little tiny shops and bits and pieces all through here, all sprinkled down Railway Parade. Oh, and Beaufort Street, of course, has got an enormous number of coffee shops and eateries and shopping opportunities. But just here, there's Morley Galleria, which is an enormous shopping complex, probably one of the third or fourth largest complexes in Western Australia. An enormous complex. Let alone, of course, you can drive into Perth. It's only 7 kilometres away. And there's also shopping areas up in here in West Perth, as well as North Perth and other bits and pieces. So shopping's certainly covered. The other issue, of course, is employment hubs. That always drives investment. This area here, Cloverdale, Belmont, have been enormous employers over the last 3 or 4 or 5 years, and the enormous upgrades to Perth Airport and surrounds, along with the rerouting of these roads, have been enormous employment drivers and will continue to be so for some time. And of course, you've got Perth City and all the employment that entails, as well as West Perth, which is the sort of business hub now of WA. If you're a lawyer or a plastic surgeon, you've got offices in West Perth, and then you've got Subiaco for other offices as well. And of course, it's also the place where the junior and the major mining companies have their headquarters. So proximity to work is not a problem at all. One of the other issues apparently is popularity locations is schools. So I just put some red lines around all the schools in the area. So not only are there primary schools, of course, as you can imagine, there's also a senior high school here. There's also another senior high school here, and Edith Cowan over here just by the Mount Lawley Golf Club. So certainly no shortage of schools in the area. And look, it's not a surprise, guys. You can draw a ring around most capital cities of about 10 kilometres, and you're going to find those sorts of suburbs that have been around for probably 80 to 100 years. They're in the process of being revitalised and redeveloped. So the old houses being knocked down, the large blocks being developed. That hasn't occurred much in Bayswater, and there's certainly no oversupply as there has been down south in the Belmont area. And changes to the zoning rules will probably mean there will never be, in the foreseeable future, an oversupply. And we're just very fortunate that we've got the development approval for this particular site. I've just put some photographs up here to show you sort of the feel of the place. I can tell you that it's 7 kilometres from the city, but what does that look like? Well, here we are. This is the Swan River up at Bayswater, and there's a view of the city 7 k's away. So that gives you the sense of proximity, perhaps. And this is the Galleria down here, the major shopping complex nearby, and this is the new vision for Perth Airport, the major upgrades that are going in. So that's sort of the site, as it were. Now, the big question for you guys is who's going to do the development management? Who's going to run the whole program for you? And the answer is Bird Property Group. Matt Birdwood, the man doing the operation. He's run all our projects in the past, and he comes thoroughly recommended, of course. So Matt will be the guy that starts the ball rolling at the very beginning and then finishes everything at the end and does everything in between. He will be the team leader for all this project. So guys, in summary, these are the advantages we see for the Armchair Developer concept. The first one is it's an ideally located long-term investment. That's the key. Tell the truth, the big money is not in the profit margin between the value of the project and the amount you paid for it. The big money is in the long-term capital growth. You might make $60,000 or $70,000, $80,000 out of this, but if you keep it for another 10 years, you're able to make $400,000 out of it. So it's going to be a well-located property. You do purchase below market value, and that is an attractive feature. And as a consequence, the percentage rent returns are that much higher for you. Also, because you've now got built-in equity in this project, it's worth $450,000 and you paid $350,000. There's $100,000 equity that you can use to borrow money from for your next property, thus accelerating the growth in a property portfolio if that's your aim. There are some significant stamp duty savings, and it's a bit peculiar, but essentially it's this: when you buy the land, there is stamp duty payable. However, because there's no beneficial change in ownership at the end, there is no stamp duty payable. So you probably save around $13,000 in stamp duty savings alone. And because at the end you take full ownership of this unit, it's yours to do what you want, the same as if you'd bought it from a real estate agent or whatever, there's full depreciation on the building costs and all the chattels that go with it. So it's just typical of a normal investment property once you've taken ownership. So guys, where we're up to with this project is this. We have now got a 60-day option on the land, and we're doing our due diligence. We finished building the profiles, and we're hardening up our numbers. So the profile's made. My recommendations would be to get a copy of the profile. If you haven't got one already, just ring me or email me or Derek, and we'll send you through a profile post haste. Ask all your questions. Have a good look at it. Make sure you understand what's going on, and contact us straight away with the things you don't know or you can't understand. And don't hesitate to ask the hard questions. You know, what's in it for you guys? You know, what are the risks? All those sorts of questions. You know, really tease out all the answers you require. But also, put down the units you prefer. Fill in that little form there, or write it down in an email, or contact me and I'll send you the form. And that way, we can get a feel for what units are popular and what units are being selected. And that'll get us some indication of interest. Now, it's not binding. You're not committing yourself to anything. It just gives us a good feel for how the project is progressing. And then we'll confirm the numbers. I mean, we'll go and finalise our valuations and get the finalised numbers back to you in the form of an information memorandum. You organise your finances, provide the deposit, and away we go. So, all good. So guys, I hope that's been of some use to you, but if you've got any questions, there's our contact details on the screen. Don't hesitate to get in contact. We're around all weekend, so give us a ring and we're happy to talk about this project or other projects or investing generally. And just by the by, if you're looking for a finance broker, we're recommending Brad Blaxall, not because we get anything out of it, it's just that Brad does all my finances, and if somebody's looking for a finance broker, I can personally recommend Brad from my own experience. Thanks, guys. If you've got any questions, don't hesitate to call. Have a good day.